Good morning and a very warm welcome. My name is Hugo Kidston and I'm delighted that so many of you have taken the time to join us for the Allianz Risk Barometer Press Conference 2023. And let me just introduce what we're going to be talking about today before we get into the content. And if I may, if it's not too late, may I wish you all a very happy new year at this stage in the middle of January. I hope it's all a very good 2023 for us all. Today's presentation will be delivered in English, partly to spare you my very poor German, of which I apologize. Will take about 1 hour. We will be recording the initial presentation, but not the Q&A section. We will also be taking Q&A at the end of the presentation. We're very happy to share the slides after the event, so please don't feel free, no need to take screenshots or whatever. We will share that with you after the event. Now, let me just introduce who we have today. We've got two chiefs joining me. We've got Shanil Williams, our Chief Underwriting Officer for Allianz Global Corporate and Specialty, based out of London. Good morning, Shanil.
Morning, Hugo. Morning, everyone.
And I'm delighted to welcome our partner in many of these endeavours, Chief Economist of Allianz Group, Ludovic Subran, calling us from Paris today.
Hello, everybody. Happy New Year from me too.
Very good. And as I say, my name is Hugo Kidston. I'll be running the presentation and managing your questions when they come in and putting them to our panelists, Ludovic and Shanil. But let me start off by talking a little bit about what's on the agenda today. Now, we're going to give you a bit of background, if we just go to the agenda slide, explain a little bit about where the barometer came from, what's in it, who participated, before I give you a short overview of the top business risks worldwide, but also with a specific focus on those in Europe. And then I'll be inviting our colleagues, my two colleagues, to comment on both the specific risks of cyber and business interruption. And Ludovic will be focusing on his home territory of macroeconomic developments and indeed the energy crisis, which of course is highly visible. So let's take a look then at the methodology of the Allianz Risk Barometer. Now, this is the 12th year we've been running it. It is a survey which very much focuses on the operational business perspective of risk. We ask experts, externally and within Allianz, people who deal with risk every single day, who evaluate risk, who think about risk every day, whose business is risk. We ask them which business risks are currently top of their mind. We ask them, the primary question is, tell us which business risks are top of their mind. We ask them to select up to three business risks. And based on that feedback, we had last year just over 2,700 respondents, a very good, a record attendance, representing businesses, risk managers, risk experts in over 90 countries, 94 countries to be precise, and from 23 different industry sectors. So a very wide cohort there who answered our survey. And the survey ran from the middle of November for 1 month, ending on the 18th of November, 2022. So that's the background here. But let's talk a little bit about what is actually the results. What came out? Now, it is no surprise to me, and probably not to you, that cyber incidents and business interruption remain the key risks for businesses based on our responses. They keep the first and second place overall. This is the same as in 2022, with a strong feedback that these two topics, which we'll be exploring later, really dominate the risk agenda at the business and operational level. However, we also have rising interest around the economic situation, which indeed is what Ludovic will be talking about. Macroeconomic developments are very strongly in focus, not least, of course, inflation and the risks that poses. But here, for the first time, at number 4, we have the energy crisis. This is clearly very high on that agenda and is a new energy at number 4 globally. But in European circles, in European companies, it actually comes in third at number 3. In addition, we have some some risks which have been seen for many years in the risk barometer. Changes in legislation and regulation at number 5, steady at number 5. But interestingly, natural catastrophes and climate change have declined slightly in the overall barometer, still in the in number 10, in the top 10, but perhaps in a year where natural catastrophes were less front of mind, despite the very high natural catastrophe activity we saw in terms of insured losses in 2022, with Hurricane Ian, of course, being a very major natural catastrophe event in the United States in September. Shortage of skilled workforce remains a major topic. Indeed, in many European countries, we see that in the top 10. And traditional risks like fire and explosion remain visible. They always, I think, will do, because for operational risk managers, that is a major cause of risk. But interestingly, at number 10, and not surprisingly, political risks and violence in a year that was marked by many such activities is in there at number 10, making a new entry to the top 10. So let's take a look, if I may, at the top concerns around the world. Now, this is a very detailed slide. We'll send it to you later, but let me highlight a couple of points. Generally, there is a consistent view particularly across Western Europe, where we see these big three topics coming up of in cyber, business interruption, energy crisis, macroeconomic developments really dominating. But if we pick out a couple of variances from this, if we look at China, you will see that the pandemic, COVID-19, remains very much front and center, not least because of the easing of rules and the relaxation of restrictions in that country and the potential consequences, which indeed we're seeing already. On the other side, in the Southern Hemisphere, in South Africa, for example, we see critical infrastructure reflecting the local situation there as a major theme for risk experts in that country. But generally, a fairly consistent approach around the world, which we also see reflected in the European situation, which we'll now take a look at. Let's go to the next slide, where we can have a look at the risk profile in 4 major European economies. We happen to have selected these because of the attendance on today's press conference. You will see quite a lot of consistency across the overall rankings. As I said before, business interruption, cyber, and the energy crisis really dominate, with macroeconomic risks and developments coming in around 3 or 4 generally in most areas. However, the shortage of skilled workforce remains, for many economies, a high issue. We see it for the first time in the top 10 in Germany. What's more, we also see it quite high in the UK, at number 5. In terms of other risks, we do also see, for example, in Switzerland, critical infrastructure blackouts coming in at 9. Retaining a risk, reflecting perhaps some of the developments in the energy crisis there. So overall, a fairly consistent profile in Europe, dominated by those top 4 risks: business interruption, including supply chain disruption, cyber, and the energy crisis, with macroeconomic developments very much around 3 or 4 in most economies. Now, with that, I think what we'll do now is take a deeper look at some of these specific risks, and I'm going to hand over to Shanil, who's going to talk about cyber. This is an particularly interesting and important risk. I look back at the results of the Allianz Risk Barometer. 10 years ago, it was not even in the top 10. Now, it's front and center for the second year running at number 1. Shanil, over to you, please.
Thanks, Hugo. So, yeah, I think no surprise, as Hugo said earlier, but I think the key here is this one is likely to remain elevated because of its interconnectivity with some other risks, but also the global nature of cyber. I think reading some statistics this morning, actually, I think now the estimated cost of cybercrime to the economy is around about 1 trillion. That's almost 1% of global GDP. So the impact of cybercrime significant globally. What we've also seen this year, when looking in a little bit more detail at the concern of companies and those professionals which are dealing with risk every year, is certainly data breach remains very high, albeit that's an area, particularly in Europe, we have seen not a huge amount of claims activity, certainly in the US, where the legislation is more mature across all the states, Australia, Canada, that is a big driver of claims, particularly around the regulatory and legislative slide. But certainly we see that as a growing concern in Europe, with obviously much stronger EU regulation coming into data security, particularly around personal information. Ransomware attacks, I think many of you would have seen the big spike in ransomware activity pre-COVID. That's continued at elevated levels and still is around 50% of the concern for those risk professionals. On the data breach side, I think what's important when you read through the report and also in the conversations we have, there's a big reputational concern there. We've seen when there has been high profile data breaches, the overall impact on reputation to the company, share price drop, even CEOs and C-suite executives having to leave companies when that personal data is compromised. The terrible conflict in Ukraine and of course the wider geopolitical tensions have created much more focus on so-called state-sponsored attacks or large-scale attacks as war evolves in the way it is brought. So certainly cyber war is a big topic and a big concern for many of our large companies that operate on a global basis. Just on the next bullet point, building on what I said earlier on ransomware, triple extortion is the new norm. Some of you may ask what triple extortion is. This is where the malicious actors not only seek money from the organization that they're extorting, but also others impacted. So whether that's customers, whether that's other people in the supply chain, we see this now as the norm, that those attacks will not only impact the company itself, but anyone else along the value chain or supply chain of that data consumption or use. The cost of the data breach, no surprise, is at an all-time high. Inflation, of course, plays through into that, given the significant professional costs and security consultant costs needed to handle those. Cyber, also business interruption. I think I saw a question on the chat as well. We can come back to that later, but certainly there is a little bit of intertwining there between the BI and the cyber, because cyber is a driver of BI, and that is the area where we've seen significant claims in our cyber portfolio, and the market has seen, again, particularly as companies rely on technology and digital transformation to run their business. Just before we turn the slide, also I think important to mention ESG, which is a term which is used a lot in risk, and I think sometimes cyber is forgotten there with all the focus on the environmental side and the climate change, but cyber actually does touch all of the three letters. Certainly sustainable technology is a big topic. Certainly when you look at green energy, there is a lot of technology behind that. There's a lot of interconnectivity, operational networks running those new energy. The S, I think, is not a surprise given the social impact on lost personal data, and the G, the cyber governance, of course, critical to companies to manage this risk. We can move through to the next slide, please. Business interruption, again, one that comes up with many of our clients and touches also many of our insurance policies, not just the property one, also the energy companies, and also cyber, as previously mentioned. Cyber is the cause there that companies fear the most, quickly followed by the energy crisis and Nat Cat. No surprise there, given what we're seeing in climate change, and again, significant Nat Cat events throughout not just the US, but in this year in France, we saw significant hailstorms with business interruption impact to some of our large customers. Supply chain, as Hugo referenced earlier, we see an easing of the concerns and the holdups from the pandemic, but certainly other elements are now playing into that supply chain disruption, notably the war in Ukraine. And as people have to consider their supply chain, whether they want to move more onshore or near shore, whether they want to consider those geopolitical risks in where they base their manufacturing plants or their distribution centers. So certainly that has had a rising concern for our customers on supply chain as they move those and think more strategically about those supplies, particularly in the light of economic and political conditions. We see another heightened year for BI, again, built on those economic and political things. I'm sure Ludovic will speak a lot about that. Certainly, a lot of our customers are asking for us to help them with business interruption in terms of data. It's quite difficult, not only for us, but also even the customers to look at particularly their second tier and their third tier suppliers. And quite often, these are the ones which are causing the unforeseen business interruption down the supply chain, not necessarily their first. Many companies we're seeing, as mentioned, have adjusted those strategies. I think Ludovic will talk a little bit about that because that heavily plays into the political side. But certainly, when you think about as nations turn inwards, they become more skeptical about cooperation and globalization. That certainly takes a turn in the strategy. Inflation, of course, does play in. The cost of the supply chain is increasing daily. And importantly, again, I would reference ESG. Some of you may be aware of the Scope 3 emissions. So Scope 3 emissions are emissions not directly coming from you, but again, will be coming through your supply chain or other people part of your business process. And there will be a much closer scrutiny on those Scope 3 emissions and the relevant impact or changes needed to supply chain. Again, as Hugo referenced, you see the ranking history pretty consistent there on the BI side, and we expect that to remain steady looking forward. I think back to you, Hugo, or straight over to Paris.
I think it's straight over to Ludovic, but if I could just say that we will have the opportunity, of course, to take their questions at the end of Ludovic's session. I see there's a question in the chat, but we will be able to unmute you so you can verbally ask your questions as well. With that, over to Ludovic, please.
Thank you. Thank you very much, Hugo, and thank you, Shanil, for the intro, which actually, in the business interruption angle, there are a couple of topics that are related also to macroeconomic risks, such as supply chain disruptions. And I think, one of the big learnings from the successive war against the virus and war against Putin is this idea that we have maybe overlooked some underlying vulnerabilities in commercial infrastructure, in energy infrastructure. I personally now, when I travel to a country, the first question I ask to dignitaries is, where do they get their energy from? And so it's because we didn't really look at the pipes before, and now, for companies especially, this has become their bread and butter. And we will talk in particular to the efforts that they've been delivering all through 2022 when it comes to energy efficiency. But first things first, I think 2022, because of the war and because of the rapid rise in inflation, was, for companies, it was really a return to economics 101. How do you behave when it comes to stock management in a shortage economy? How do you manage costs? How do you manage wage increases? How do you increase prices and use pricing power? And I think this return of macroeconomic fundamentals into the life of companies has been quite chaotic for many, because of course there is the risk that they can see, but there is also the very strong policy interventions. And so for us, this was no surprise that this came back strongly on the podium with the bronze medal. I think companies are concerned about the trifecta of lower growth, still high prices, and of course higher cost of financing, which has been a paradigm shift. And in most of our countries in Europe, for example, the interest rate shock is almost 300 basis points in the last 9 months, which is a massive change of environment for companies that need to invest and that have some refinancing needs. So I think there is this concern about this trifecta ahead. There is a lot of resilience, and we've seen that in the GDP numbers, but we also see that in the activity numbers. across European countries, including manufacturing countries like Germany or Italy, but also countries that have been in the past particularly in duress, like Italy. So we see this Damocles sword on the company's shoulders for 23. They're navigating it the best they can. They've understood better the art of managing or weathering, I would say, the higher inflation environment. They also understood that 2021 was quite an exceptional year when it comes to profit growth. The recovery from the reopening was exceptional. And so 22, and maybe, a word on financial markets, 22 is one of those years in the financial markets where you think there is nowhere to hide. So there were a lot of concerns about this very strong negative shocks on the bond market and the stock markets. And of course, the beginning of 23 is on better auspices, but there is this taste for volatility when it comes to access to financial markets that is becoming also an important topic for the companies we surveyed. This, illiquidity risk or access to financing risk. It's for some sectors, it's really the combination of higher energy cost, higher wage bills, and higher cost of financing that is really creating a profitability shock. And maybe a last word, which is also quite important, is we see payment terms. So the working capital of companies being under a little bit more stress. So we see payment terms increasing by almost, at least for listed companies, at least a good 2 weeks in 1 year in 2022. So there is increased risk of non-payment in the system. That's usually, what happens when you have a deceleration of growth. That's also what happens when you have a higher price for being paid faster. And that's what happens when you have inflation, right? Managing your working capital is even more important. And it's also something that happens when you have this concern about higher interest rates from your bank or from the markets. You would tend to use the suboptimal bank, which is your providers. So you would use a bit your suppliers as an invisible bank, right? And these actually are the ways the macroeconomic and financial environment trickles down to the treasurer, the CFO, the chief risk officer, and risk managers of the company. They've, I think, rarely spoken as much about what do we do in terms of coping strategies to face inflation with our clients, our suppliers, our margins. They've rarely talked as much as they do today about weathering the next recession. And how do we also, you've seen that in the risk number 5, changes in legislation and regulation, risk number 10, political risk and violence. So there is this combination of very politicized macro, which is also on the mind of risk managers. How do I work around the risk of increased rivalry between China and Taiwan? How do I work around the increased risk of social unrest in some of these countries that are related to the cost of living crisis? So that's we going from rank 10 to rank 3 means that maybe there is higher economic acumen among risk managers, and so we think it's a good thing in the end. But this is also something that will stick, I would say, managing your business in a slightly different environment, especially in Europe, than the past 10 years. So if we go to the next slide, this is, of course, something which is very important to understand today's angst among companies. For the past 10 months, we've been trying to figure out a way to weather, I would say, once in at least in a 40 years span, energy crisis. This is a new risk. This is coming in strongly, mostly because, as I said before, we overlooked the pipe. We didn't really think vividly about where we get our electricity from. And for companies, I think they've always been counting on, I would say, smooth and rather cheap energy supply, be it gas or power. And so, of course, this world completely changed in 2022. I think 22 was also a year of record progress when it comes to energy efficiency. A lot of the companies have shown that they can really reduce leakage, that they can reduce wastage. And so we've seen that especially in manufacturing country where gas and power use has decreased as gas imports and power prices really changed. We've seen governments stock and hoard as much as they could from Russia. And the winter was in question, or at least there were a lot of concern about outage and blackout risks. I think the winter is going okay. Gas prices are going down, power prices as a result, especially in Europe, are going down. But the concern now, and the reason why companies are maybe less optimistic than markets, and certainly less optimistic than the average person in the street, is because they continue to see not only that price controls and administered prices is something that can actually work only till there is a strong commitment, a public finances commitment from governments to make it work. And I think they also see, just like for themselves, that the interest rate environment has changed. And so price shields are extremely costly. That's the case for my country, France, where it's almost 25 billion for the price cap on power for households. And now we are actually thinking about extending that to companies. They see governments announcing a lot of measures to support SMEs, but also big companies. So I think companies are concerned about how low and how long can governments keep a lid on power prices till they reform the power markets. That's for Europe, but more generally on gas and energy prices. Why? Because they've seen a not very collaborative energy market. OPEC countries not announcing that they will increase production, gas prices from substitution sources also going in a bit higher. And they also see that there is fragmentation in the way people see the energy policy, even within Europe, right? And the second topic is companies, because now they've really scanned, I would say, the pipe infrastructure, are getting, I think, increasingly concerned by our lack of action in the past year when it comes to increasing our megawatt per hour created from renewable energy. I think companies are really interested in physical energy supply. So beyond prices, they also see that we are really lagging when it comes to infrastructure building for new and diversified energy supply. I think a lot of the company's business has been running in low mode for the past months. They had inventories. They had indeed, some support for some of the companies, but they also know that some of this resilience is coming from the more sluggish growth. And if they want to have more ambitious plans, investment plans, acquisition, a bit more, increased production, we start to see that they're extremely hesitant when it comes to the promises by governments. I give you examples from the manufacturing sector. The location of the firm between the US, where energy price predictability and supply is more assured, and Europe is a big question today in terms of relative attractiveness from one country to the other, related to the smooth and cheap energy supply. Another issue is, I think companies have also looked much more into the interruption risk from energy sources, technical failure from older infrastructure, the idea of where can they go from now after having done most of the efficiency gains this year in terms of switching, energy supply sources, their ability to be connected to a grid that is well functioning should there be additional renewable energy capacities that is coming fresh to the grid. These are, I think for most chief risk officers, they discovered a lot of epidemiological concerns from, office airflows to minimum distances by law to keep people safe. And they are now rediscovering a lot about energy supply, safety, and procurement. We've seen, for example, a lot of companies in Europe calling for a rapid change of the design of the power market in Europe, but also different instruments when it comes to securing longer term forward contracts for energy. And this type of business request is not high on the agenda. And this is creating a lot of concerns about how we are procrastinating in finding real solutions to the energy crisis. And I think that's why, contrarily to the feeling of the man in the street of a light respite when it comes to the energy crisis in January, maybe more respite felt than in November. I think in companies, people are extremely worried about the next winter. And I think that's why this risk is high on this agenda. Go back, over to you, Hugo.